Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. The Cryptocurrency News EN channel does not recommend any offers to buy, sell, invest, etc. in the cryptocurrency market in any way, and any losses and other consequences are your responsibility. Our channel only follows the news of the cryptocurrency market and does not provide you with any advice on making transactions. Please enter into transactions in the market with your own analysis. Solana faces pressure as on-chain activity declines and token unlocks loom. SEC moves forward with Cboe's request to list 21Shares XRP ETF, a turning point for crypto regulation. FTX sets May 30th for next round of repayments. Will it impact crypto prices? FTX begins $1.2 billion repayments, a turning point for the crypto market. Tether expands beyond crypto, plans to acquire majority stake in Adecoagro. Solana faces pressure as on-chain activity declines and token unlocks loom. Solana's native cryptocurrency, SOL, has faced a significant downturn, dropping 17% between February 14th and February 18th to trade near $164. While many attribute this decline to the recent Libra memecoin scandal involving Argentina's President Javier Milei, deeper factors are at play that are exerting pressure on the network. Beyond memecoins, a broader market shift. The dramatic crash of Libra, which saw an 83% price decline after early investors cashed out, has certainly contributed to negative sentiment. However, it is an oversimplification to blame SOL's $18 billion market cap loss solely on one event. Other key factors include declining decentralized finance, DeFi, activity, reduced trading volumes, and an impending major token unlock. Solana's declining on-chain activity. One of the primary drivers behind SOL's downturn has been the declining interest in decentralized exchanges, DEXs, and new project launches on the Solana blockchain. Since demand for SOL is closely tied to its use in dApps, any reduction in on-chain activity naturally impacts its price. Solana's DEX volumes have fallen 91% over the past 30 days, dropping from a peak of $35.5 billion on January 17 to just $3.1 billion by February 17. This sharp decline follows the fading hype around memecoins like Official Trump, which initially drove significant transaction volumes on the network. Meanwhile, while Solana's DEX activity declined by 20% in the past week, competitors such as BNB Chain saw a 35% increase. Key contributors to BNB Chain's growth included platforms like Thena, Uniswap, and Dodo, all of which saw volume surges between 50% and 100%. Solana's DeFi sector struggles. Another area where Solana is underperforming is in its total value locked, TVL, within DeFi applications. TVL represents the total assets deposited into DeFi platforms and is a key indicator of network health. Over the past 2 weeks, Solana's TVL has declined by 19%, with major outflows from projects like Jito, Camino, Marinade Finance, and Sanctum. While some platforms, such as Meteora and Drift, manage to grow, the overall trend remains bearish. In comparison, Ethereum's TVL dropped by just 2%, while BNB Chain saw an 8% increase, led by lending and risk-taking platforms. Upcoming SOL token unlocks add pressure. Adding to market concerns is the scheduled unlocking of over 15 million SOL tokens in Q1 2025, valued at more than $2.5 billion. This represents 12 times the amount of SOL unlocked in the previous quarter, creating potential selling pressure that could weigh on the price. While these unlocks were previously known to investors, they have contributed to an atmosphere of uncertainty, amplifying fear, uncertainty, and doubt, FUD, across the Solana ecosystem. The bigger picture. Although the Libra scandal undoubtedly played a role in Sol's recent price action, a deeper look at Solana's on-chain metrics suggests that the network was already experiencing a downturn. Declining DEX volumes, reduced DeFi engagement, and an upcoming token unlock cycle have all contributed to its struggles. With SOL trading at its lowest levels since November 2024, will renewed interest in DeFi and upcoming network upgrades be enough to restore investor confidence? SEC moves forward with Cboe's request to list 21Shares XRP ETF, a turning point for crypto regulation. Regulatory progress for XRP ETF listings. The U.S. Securities and Exchange Commission, SEC, has officially acknowledged a filing by Cboe BZX to list asset manager 21Shares XRP Exchange-Traded Fund, ETF, marking a pivotal step for the future of cryptocurrency ETFs. The acknowledgement, confirmed in a regulatory document dated February 14, indicates that the SEC is considering expanding its approval scope beyond Bitcoin and Ether-based ETFs. Cboe BZX's proposal, submitted on February 6, includes the request to list for spot XRP ETFs, among them the 21Shares Core XRP Trust. This move signals a potential shift in the SEC's stance on cryptocurrency products, especially as U.S. President Donald Trump's second term brings expectations of a more favorable regulatory climate for digital assets. XRP's legal and regulatory landscape. The regulatory scrutiny surrounding XRP has been a major roadblock for its adoption as a mainstream financial instrument. The SEC previously filed a lawsuit against Ripple Labs in 2020, accusing the blockchain firm of issuing unregistered securities when launching XRP. However, in August 2023, a U.S. court ruled that XRP was not inherently a security, though it could be classified as one under specific conditions. If approved, listing XRP as a commodity-based ETF would align it with existing Bitcoin and Ether ETFs, which were greenlit in the U.S. last year. This categorization could provide clarity for institutional investors looking to gain exposure to XRP without the uncertainties tied to its legal status. Expanding the crypto ETF market. The filing for an XRP ETF is part of a broader wave of applications from various issuers seeking to capitalize on the increasing institutional demand for cryptocurrency investment products. Following Trump's re-election in November, industry insiders have anticipated a friendlier approach to crypto regulations, prompting a surge in ETF filings. Several issuers have filed to list ETFs based on alternative cryptocurrencies, including Dogecoin. Doge, the meme-inspired cryptocurrency, continues to attract speculative interest. Official Trump token, a politically themed token tied to the former president's campaign narrative. Bonk, another memecoin aiming to establish itself in the ETF space. Solana, SOL, and Litecoin, LTC, two major altcoins also being considered for ETF listings. In addition to spot ETFs, existing Bitcoin and Ether ETFs are seeking regulatory approval for expanded functionalities, such as staking rewards and in-kind redemptions. Moreover, a new category of crypto index ETFs designed to hold diversified portfolios of digital assets is awaiting approval. Crypto index ETFs enter the market. On February 14, Nasdaq saw the debut of the first spot crypto index ETF, the Hashdex Nasdaq Crypto Index US ETF. This development marks another milestone in the integration of digital assets into traditional financial markets. If more ETFs receive approval, investors could soon have a wider range of regulated cryptocurrency products to choose from. Given the SEC's acknowledgement of the Cboe filing, could the approval of an XRP ETF set the stage for further mainstream adoption of altcoins in traditional finance? FTX sets May 30 for next round of repayments. Will it impact crypto prices? FTX moves forward with creditor repayments. The now-defunct cryptocurrency exchange FTX has confirmed its next round of repayments to creditors, scheduled for May 30, 2025. This announcement follows the February 18 distribution of the first round of repayments, marking over 2 years since FTX's high-profile collapse shook the digital asset industry. According to FTX's official statement, the next repayment phase will cover Class 5 customer entitlement claims and Class 6 general unsecured claims. This means that customers who held funds on the platform during its collapse, along with trading partners, vendors, and other unsecured creditors, are eligible for compensation. To qualify for the May 30 distribution, creditors must verify their claims by April 11, which serves as the record date for participation in the payout. FTX creditors to receive more than expected. FTX's repayment plan, which was outlined in May 2024, estimates that 98% of creditors will receive at least 118% of their original claim value in cash. The total expected payout ranges between $14.5 billion and $16.3 billion, exceeding initial projections. FTX creditor advocate Sunil Kavuri noted that this upcoming repayment round will primarily benefit those with claims exceeding $50,000. These creditors must select a distribution agent by April 11, with Kraken and BitGo currently designated as the two official entities managing the payouts. To participate in the repayment process, creditors must complete Know Your Customer (KYC) verification, submit relevant tax forms, and onboard with their chosen distribution provider. FTX has also issued a warning about phishing scams, advising creditors to remain vigilant against fraudulent emails posing as official communications. FTX's first round of repayments and market reactions. The first set of FTX repayments began on February 18 for convenience class creditors, those with claims up to $50,000. These claimants were expected to receive funds within 1 to 3 business days, bringing some relief after more than 2 years of uncertainty. John J. Ray III, plan administrator for the FTX Recovery Trust, emphasized the company's commitment to continuing recovery efforts and ensuring further distributions. FTX appreciates our customers' and creditors' patience and collaboration throughout this complicated process. Our work is not over. We intend to continue our recovery efforts and return funds to additional claim classes. Meanwhile, crypto markets have been reacting cautiously to FTX's mass repayment process. The distribution of billions of dollars to former users has sparked concerns over potential selling pressure, as many creditors may opt to liquidate their holdings rather than reinvest in digital assets. At the time of writing, the overall crypto market has declined by 2.1% in the past 24 hours. Key assets including Bitcoin, BTC, Ether, ETH, XRP, BNB, and Solana, SOL, have all posted losses, potentially influenced by profit-taking from recipients of the first round of payouts. Could FTX repayments trigger a sell-off in crypto markets? FTX's bankruptcy saga has left many creditors reluctant to re-enter the crypto space. FTX creditor advocate Mr. Purple highlighted in an interview that many claimants may be hesitant to invest in crypto due to the traumatizing nature of the bankruptcy and the need for liquidity after being without funds for 2.5 years. With another multi-billion-dollar repayment round scheduled for May, will crypto markets experience further downside as former FTX users cash out their funds? FTX begins $1.2 billion repayments, a turning point for the crypto market. FTX's repayments mark a key milestone in crypto market recovery. Bankrupt cryptocurrency exchange FTX is set to distribute $1.2 billion to its first group of creditors, a crucial step in restoring confidence in the digital asset industry. The repayment process, which begins on February 18, 2025, is part of FTX's ongoing efforts to settle claims following its $9 billion collapse. FTX Digital Markets, the Bahamian subsidiary of the fallen exchange, will prioritize payments to creditors with claims of less than $50,000, signaling a long-awaited resolution for thousands of affected users. According to Sunil Kavuri, an advocate for FTX creditors, eligible users will receive their payments at 3 p.m. Universal Time coordinated on February 18. The distribution of $1.2 billion is expected to inject fresh capital into the market, potentially influencing investor sentiment. How will the FTX repayments impact the crypto market? According to Alvin Khan, Chief Operating Officer at BitGet Wallet, the repayments could result in a significant portion of funds being reinvested into cryptocurrencies, affecting market liquidity and asset prices. This event could boost investor sentiment by demonstrating market recovery from the FTX collapse, though the sentiment might be mixed due to the payouts being based on lower 2022 valuations, Khan told Cointelegraph. Despite the positive development, some creditors have criticized the repayment structure, as funds will be distributed based on crypto prices at the time of FTX's bankruptcy. For instance, Bitcoin, BTC, has surged over 370% since November 2022, significantly reducing the value of reimbursed funds in today's market. A victory for justice, but a limited market impact. While this first round of FTX repayments represents a step forward for defrauded investors, analysts believe its impact on the broader crypto market may be limited. According to Magdalena Ristover, public relations manager at Nexo, the repayments symbolize justice and renewed confidence, rather than a major price catalyst. The collapse impacted many investors and cast a shadow over the crypto industry. For retail investors, especially those without diversified portfolios, these repayments offer not just the return of funds but a sense of stability and peace of mind. Since this round of repayments is limited to claims under $50,000, many recipients may opt for safer investments rather than reinvesting in the volatile crypto market. With larger creditors still awaiting further repayment announcements, how will future distributions impact crypto prices and investor sentiment? Tether expands beyond crypto, plans to acquire majority stake in Adecoagro. Tether, the issuer of the world's largest stablecoin USDT, is making a bold move into the agribusiness sector with plans to acquire a 51% stake in Adecoagro, a major South American agricultural firm operating in Argentina, Brazil, and Uruguay. This acquisition marks a strategic expansion beyond digital assets, reinforcing Tether's growing influence in traditional financial markets amid record-breaking profits. Tether's growing stake in Adecoagro. According to an announcement on February 18, Adecoagro received an unsolicited non-binding proposal from Tether Investments, the company's venture arm. The offer proposes to purchase outstanding Adecoagro shares at $12.41 each, granting Tether a majority stake in the firm. Tether is already a significant shareholder, holding 19.4% of Adecoagro's outstanding shares. If the deal is approved, it would strengthen Tether's foothold in the agriculture and commodities sector, diversifying its assets beyond Bitcoin and traditional finance investments. Tether's investment strategy, more than just crypto. Tether's move to expand its portfolio comes after its recent $100 million investment in Adecoagro in September 2024, when it initially acquired a 9.8% stake in the company. A Tether spokesperson emphasized that the company's diversification strategy is designed to extend beyond digital assets and into tangible, long-term value sectors such as agriculture, AI, fintech, biotech, and energy. Investing in agriculture aligns with our vision of resilience and sustainability, complementing our existing holdings in Bitcoin and gold, the spokesperson told Cointelegraph. Tether's record-breaking $13 billion profit in 2024 has allowed it to diversify its assets, with its holdings in low-risk U.S. Treasury bonds reaching an all-time high of $113 billion. Market reaction and Adecoagro's response. Adecoagro's board of directors convened on February 16 to review Tether's proposal. The company is also consulting with legal and financial advisors to assess whether the offer serves the best interests of its shareholders. As of now, Adecoagro's market capitalization stands at $1 billion, with its share price declining by 13% since September 2024, trading at $9.80 on February 14, according to TradingView data. The board of directors will respond in due course. Shareholders are not required to take any action at this time, Adecoagro stated. Tether's expansion amid JP Morgan's Bitcoin speculation. Tether's aggressive investment strategy comes in response to recent speculation by JP Morgan analysts, who suggested that Tether might sell some of its Bitcoin holdings to comply with new U.S. stablecoin regulations. In a rebuttal, Tether dismissed JP Morgan's claims, stating, "Even in the most extreme scenario, JP Morgan is discounting that Tether's group equity is over $20 billion in other liquid assets and that it has more than $1.2 billion in quarterly profits through U.S. Treasuries." This latest acquisition bid follows Tether's recent purchase of a stake in Juventus Football Club, signaling a broader push into real-world assets. With Tether actively diversifying its portfolio beyond crypto, could this aggressive expansion strategy reshape the stablecoin market and bridge the gap between blockchain and traditional finance?